everyone. This is Avjit Chatterjee recording our weekly session of Chartsarefun. This is for the week of March 17th. Recording this on Friday afternoon, March 21st, after the market close. Our YouTube site is at Chartsarefun. That's the channel. At Chartsarefun, we appreciate you subscribe to the channel. And then if you like the videos, if you could please hit the like button. Our Substack blog site is also chartsarefun.substack.com. You just subscribe with your email and we'll send you these blogs as soon as they come out every morning. This is just the archive site and you can see all the daily blogs that we publish. Today's agenda, we're going to talk about what happened in the markets this week. We still think the market is looking for signals on the tariff front. Today, in particular, President Trump talked about there's some flexibility. He started becoming a bit positive on the tariff front. We know that we are about 5 trading days next week and then another couple of days for the week after. So we have a total of 8 trading days by which the April 2nd tariffs will come in. And there's already concerns from the market. We know that over the last literally the last 3 weeks, the market has sold off since that peak on February 19th. So today they're giving that signal that his administration is talking to the Chinese counterparts, maybe thinking of some form of, instead of tariffs, maybe using duties, some flexibility in those, gave the market a signal to kind of rally back a little bit from the initial pullback in the morning. We also know that this was triple witching options expiration week. Today was the options expiration and the market held up quite well, though we are expecting some form of a rally into next week. I'll explain why. So we'll look at some statements that Tom Lee made on a video this afternoon. We'll look at what Bitcoin, it's often a leading indicator for the market. We'll see what the Bitcoin chart is telling us. Look at small caps. Today's key focus of the video is on small caps. It has been outperforming both S&P 500 and the NASDAQ 100 ETF QQQ. We'll look at that. And another key outperformer in this entire month has been the emerging markets. We'll look at where EEM is headed and kind of give some predictions on that. With that, let's kind of go through this news thing here that Nike, FedEx were both hit hard. We know that the consumer is slowing down. FedEx, of course, from the business perspectives, there's been concerns about uncertainty in the tariff front. So FedEx, as you know, ships things around the world. So that has kind of caused some bad results, and Nike is very consumer centric. Nike has its own issues, though. There are strong competition from other footwear makers, but Nike also tanked as a result. Tom Lee, when he was at the CNBC show of the Closing Bell with Judge Scott Wapner, he talked about historically the market tends to bottom ahead of the event. So he went and talked about the Cuban Missile Crisis back in 1962. It was a 12-day crisis, but the market kind of bottomed out 7 days into the crisis, and by the time the next 5 trading days, it almost recovered 2/3 of the losses. So the key things that Tom Lee sees is, he's expecting almost like sell the rumor, buy the news. He feels that the stocks could likely rally post-tariff. So all the people who are fearing that there's going to be a newer low coming, market tanking to lower lows by after the April 2nd tariff may not pan out. He thinks that there is now a dovish Fed. So the key meeting this week was an FOMC meeting. Chair Powell talked about keeping the 2 cuts. He talked about bringing down the growth rate, the GDP growth rate from 2.1% to 1.7%. The FOMC members are concerned a bit about inflation from tariffs. So they've increased that forecast on the inflation from 2.5 to 2.7%. But there is now a Fed put because of the quantitative tightening. They brought that down from 25 million a month to 5 million, almost position. They could have done it 0, but they kept that 5 million almost like kind of in some form of a signature that they're not fully going into quantitative easing. They don't want to give market an indication that bring it down to 0, and then the next step will be from QT to QE. But they are giving an indication that they're going to watch the market carefully. If the uncertainty on the tariff front further causes economic dislocations, maybe recession comes in, they will take quick actions. And they have a lot of leeway. We know that the interest rates are 4.25. Significant cuts in interest rates can be done. And then they could also do that with quantitative easing. So that's a possibility of a Fed put. And now the unique Trump put, we saw that in the news today. Trump providing some flexibility in the tariff deal in terms of how he makes these negotiations on the tariff front, and that could be market friendly. So we talked about Bitcoin being the leading indicator to the market's pattern and the trend, and we see a beautiful ascending triangle here on the Bitcoin daily chart. The ascending triangle is between 84.4 and then the 76.6K low that was seen last week. We know that there was a lower low in Bitcoin's price from 78.2 towards late February to 76.6, but a classic positive divergence in higher low in RSI. That indicates momentum, not weakening as much as the price came to a low. That's how bottoms form. So we believe Bitcoin has seen its bottom. We believe that this ascending triangle will resolve to a move target towards 92,000, and it had broken out of that ascending triangle towards 87.5, and then the last couple of days has pulled back. Today it tried to recover. It's so far a narrow day range today, but has gone green. It's tried to fight to take over the 200-day moving average, which you see is at 84,600. It's right now near 84,255. We can see that the MACD has begun to climb. RSI is climbing higher highs. We expect Bitcoin to break, in fact, not just 92. We think that this is a 5-wave move. This is wave 4 completion. The 5th wave will take Bitcoin to higher highs above the 109. We think it could go anywhere from 136 to 142,000 is where we think Bitcoin could be going. Now, small caps have been extremely positive over the last few days. In particular, since the early part of March, we can see a beautiful cup and handle forming with the left brim of the cup near 207, 206.65. We can see that the bottom of the cup at 196.56, the right brim at 207.68, then a shallow handle. So if this breakout comes in, and we expect it to come in next week, we think that this could move from 196 to 207, 11 points. At the 11 to 207, we're looking at 218.8, closer to 219. That's where we think the small cap ETF, Russell 2000 IWM could go. And if you look at the relative performance of IWM to S&P 500 ETF SPY since that March 4th low, we can see it climbing higher highs, higher lows. So that's a bullish sign that shows the small caps outperforming S&P 500, which is the larger top 500 stocks. And the same thing with the NASDAQ 100, the technology stocks. And that outperformance has not just been from March 4th, it's been all the way from February 21st, from when the market started correcting. And we can see that it's clearly outperformed. And we know that Magnificent Seven stocks have really tanked a lot, and that's brought the market down. But the small caps overall, ratio of IWM to QQQ is clearly outperforming since that February 21st low. So that's also a positive sign for small caps. So we believe that small caps there is going to be key, 213, 214 is key resistance level. It could probably stop there, but we do believe, look at the 217, 218. We believe that it moved to 218 is definitely in the cards in the next couple of weeks. And we might get that 218 even before the April 2nd deadline if some form of breathing like positive news from the Trump administration comes to the market. Another thing is the emerging market, that's EEM, the iShares MSCI Emerging Market ETF, a beautiful cup and handle here, 45.4 to 40.6 to 45.4. They're talking about, in this particular case, 4.8 to 45.4 takes us to 50.2. That's where we see the target for EEM, a beautiful pennant-shaped handle has broken out of it. Test 45.4 again and pull back to test that rising 20-day moving average, but we believe this will successfully hold and break higher. We expect EEM to break higher. Look at this beautiful AD line climbing, indicating strong accumulation on the emerging markets. What's helping emerging markets move higher is China. We've already got some, news from President Trump today about doing some deal with China that could help Chinese stock to rally even further. We expect Alibaba in particular, to go to a target near 180. So, and Baba is right now hovering in the 140. So that's solid upside left in Baba. China will help kind of move the emerging market ETF higher. So we are very bullish on EM. And then if you look at EM to SPY, which is the S&P 500 ETF, that outperformance has been all the way from early February. You can see a beautiful climb of higher highs, higher lows all across. And that's also indicating that emerging market is a place to be, though, in the near term. From a level near 44 towards the 50, you're talking about a 6-point move. A 6-point move is about 15%, is where we think the emerging market ETF could go. With that, good luck investing. We expect to see some form of a bullish move in the markets next week, and we are extremely positive. We'll have a blog tomorrow. Do take a look at the blog. We're going to talk about some further signs from the market breadth indicators, the New York Stock Exchange advanced decline line, the summation index, all indicating why we think that there is upside coming into the market next week. Thank you. Good luck investing.